Everyone is so bearish on the stock market, it is actually bullish. Guys, this is going to be the topic of discussion in today's stock market analysis outlook for the week ahead. And guys, as always, if you do find this video useful, please don't forget to give it a like and share it with your friends and anyone else that may find it useful. And if you are new to the channel, guys, please consider subscribing. We do bring out the latest stock market analysis outlook every single week. Now let's get into it and start off by comparing actually the Dow Jones US 30 with the Nasdaq, with the US 100. And I just wanted to show you guys the difference between the two and what's been pushing up the stock market in the last couple of weeks. As you guys know, we've had the FOMC meeting last week where the Fed emphasized the need for higher interest rates for longer, and also that they were looking to tighten financial conditions, which means lower stock market prices. They emphasized the need for that in order to get inflation down. And then on Friday, guys, we had the non-farm payrolls, which suggested that the economy was still strong and the unemployment rate was taking slightly higher from 3.6 to 3.7%, which literally suggests that the economy is still in a very strong shape. Now, there's two ways to be looking at this, because you may argue that because the economy is so strong, people are not getting laid off, people are not losing their jobs, and the Fed has to, keep raising interest rates to bring that recession in the economy and to bring inflation down. However, there's another side of the story which basically suggests that we do have the US midterm elections starting tomorrow, the 8th of November, and the only reason the job numbers were high and higher than expected is because of the midterm elections, just to show that the economy is in a very strong shape, which in other words, is not really in a very strong shape at all. Those numbers were cooked, and when it comes to next month, we will see that they will revise the numbers and they will show that the economy is indeed in a recession. So they only showed the strong numbers just because of just to make people believe that the economy is in a very strong shape, where indeed it is not, because we have a lot of companies actually reporting a lot of layoffs. So how is it that we are still adding jobs? It doesn't really make sense. But anyways, we'll have to wait and see what happens next month in terms of when it comes to the next jobs report. As of now, just wanted to look at US 30. And guys, US 30 compared to the Nasdaq, there's two different pictures here. We have the Dow Jones, the US 30 here, showing a very strong recovery over the last couple of weeks. And if we look at the Nasdaq over the last couple of weeks, well, it's been in a downtrend, a very aggressive downtrend, I can say, and it's all because of a number of reasons. First of all, is this to do with tech companies getting hit really hard, and the financial companies, which is what's driving the US 30, is getting a big lift. Now, both charts are at key levels, and we discussed last week, starting with US 30 here, we discussed last week how the US 30 is in it's at a critical level here. It's at the daily IC here, and if price was to react and change its course, well, this was the moment, this was the place where it should have done so. Now, we did have a reaction from the daily IC, and guys, we communicated this live on the Discord channel, our Discord community. If you are not part of the community, head over to our website, mcitradingacademy.co.uk, where you can get free access to our community. Guys, we do post a lot of trades, live trades every single day, and setup. So if you're not part of the community, you are really missing out. So make sure you go and request access as soon as you can. Now, in terms of the US 30 here. So we did have a reaction from the daily IC here, a small reaction, and then we are again taking higher. Now this chart here, guys, looks very, very bullish. Okay, we did have a break of structure here. We had a higher high. We've made a higher low, and we are now potentially going and looking for a higher high. And if we are to look at the daily here, guys, we are in a very important, we are at a critical level here, because we are just about to break this this weekly trend line here, which has been holding at big resistance forward since December of 21, that's where it started from. So it's been some strong resistance. Now if we do break this out and we do break above this level here of 33,700 or so, guys, we will have a break of structure on the weekly, and that is very, very bullish, guys. Okay, so pay attention to this. What we need to look at, we need to see price rejecting. Okay, so price failing to make a higher high and then breaking the structure here on a daily for it to say that we are back in a downtrend. But as it stands right now, okay, this is a very, very bullish chart, and because it's a very bullish chart, okay, you should keep adding new buy positions on every pullback. Okay, so if you were to look at this, we had a nice reaction out of this 4-hour IC here, or this 4-hour IC here, and we are now going back and try to make a new higher high. Now we have two levels that I'm watching, which is this 8-hour IC here, okay, at around 33,200, and the final point where if we are to turn around, this will be the level. It's here, right at around 33,850, guys. Okay, if we don't turn around here and we go and cruise through this, then we may potentially be looking at new highs for US 30 even this year. You never know, how it depends of a number of factors we should talk about in today's video. But if we are to turn around, it's either here at the first 8-hour IC or at the second 8-hour IC. Okay, so watch this very closely, guys. This is going to be crucial. Now, going into the US 100, guys, this is taking a beating, okay, and it's just making lower lows and lower highs, and it's just, this looks awful, okay, from the perspective of technical analysis. And with everyone I talk about this, they're saying that the Nasdaq is gone and it's going perhaps to test this IC here at around 7,760 or so. Now I don't think that's the case just yet. Okay, just yet. There's a number of factors that I look at. And first of all, guys, the Fed emphasized the need for lower prices in the stock market. Now, because he emphasized that, everyone is expecting lower prices. And because of that, when everyone is expecting one thing, the opposite tends to happen, which is exactly what I'm expecting now. Because everyone is so bearish on the stock market, I expect price to push up higher to literally melt everyone up. Okay, so short squeeze everyone out, and then we expect lower prices to come. So in the short term, I'm actually expecting higher prices in the Nasdaq and in the stock market in general, especially when we look at the DXY in a second here. Now, in terms of this chart over here, now guys, on the weekly looks awful. Okay, now one thing that hasn't happened here, we haven't had a new lower low. Okay, so all we had the lower low, we had the lower high, and we failed to make a new lower low here. Okay, we just retested the lows, but we failed to make a new lower low. So now if we do push through this level here, which is acting as some strong resistance here, if we do push through this 8-hour IC, then we'll have a break of structure on the weekly, and then we're looking at higher prices to come. So even though on a daily picture here, we did make a new lower low, we haven't made a new lower low here on the weekly. And if we fail to make a lower low, guys, okay, it suggests to us that the momentum of the sellers is slowing down and the buyers are looking to come in and push through these guys. Now, one reason to support this argument is just to look at the heat map here. So the heat map here, it's showing the performance year to date of the stock market, and you can see, guys, the big names are down. We get Apple 22% down, Microsoft 33%, Google 40% down, Amazon 45% down, Tesla 45% down. So if you were invested in those companies at the beginning of the year, you will be down big time. Okay, now guys, those are big names and they will try to recover. Okay, they will have to pay their bonuses at the end of the year. Okay, they will have to uh, they will have to recover at some point, okay, before the end of the year, just to show that, you know, because they're so beaten up and they have a huge potential. And we also have corporate buybacks, which has opened on the 28th of October, I believe. Okay, where companies buy back their own shares. Now, because of that, they will push up the stock price. So that's another argument for saying that in the short term, perhaps until the end of the year, we will see a bounce in the stock market. So guys, watch out for that. First of all, you can see how the financial companies here are down, but are not down as much. Okay, you got the Berkshire Hathaway here down only 4%, JP Morgan only down 18%. Okay, Bank of America down 18%. So, and the other names, they're not down as much as 40%, 45%, Amazon 45%. So they're not down as much, which has helped the Dow Jones, the US 30, be a bit stronger, okay, compared to all the other indices. Now, imagine those companies here, okay, Apple, Microsoft, Google, they're starting to get a bid up, okay, Tesla, they're starting to get a bid up. They will push the overall stock market up, guys. So watch for those names in the next couple of weeks, because if they do get a bit up and people start buying them, okay, or even they started buying back their own shares, they will push up the stock price, okay, in the short term, guys. Okay, in the short term, the pain trade is up, it's not down. Everyone is expecting the stock market to go down. So what does it do? It should go in the opposite direction. So watch out for that, guys. It's going to be very, very important. Now, before I carry on, I just wanted to show you guys the news announcements that are due to come out this week. And the most important news announcement to watch out for, guys, will be the CPI data, and that will be on Thursday, the 10th of November. This is the most important economic news for the week, guys, okay? And this will be crucial. Now, just a bit of background on this. This is the inflation data. And if we are to look at what inflation has been over the last couple of months, inflation has been higher the last couple of months, higher than expected, almost every single time apart from August. Okay, now I've done some analysis on this, and I'm just going to show you what the S&P has done versus the VIX every time over the past five readings of the CPI data. Now, we only had one CPI data that was less than expected, and that was in August. So here what we have the S&P 500 on top, and we have the VIX on bottom here, and the red arrows indicate that the CPI data was higher than expected, and then the light blue here indicated that the CPI data was lower than expected. Now, just wanted to show you that not every time the CPI data came in higher than expected, we had a big crash. You can see here the only major crash that we had was in June. On the 10th of June, the CPI data came as a shock because they were expecting the inflation to have peaked in May, where this wasn't the case. And because of that, we had the VIX spiking higher, okay, and the stock market, okay, the S&P 500 going down. Now it went down, and you can see here we had the VIX spiking higher. However, the next couple of weeks will actually perish, okay, for the VIX and bullish for the stock market. Now, the next reading, we had another hot CPI print in July, and you can see the VIX was actually more or less as a doji for the day, and then it went lower. Okay, so this it didn't too much of as a shock, and then we had the S&P 500 going higher. So at this point here, it didn't really matter. Okay, the data didn't matter as much, and we rallied anyway. Okay, the reason I'm saying that is that we may get a higher than expected CPI data this time again. Okay, and we may not necessarily crash. Okay, that's the only reason I'm showing you guys this. You can see here in August we got a lower than expected inflation data. That's bullish for stock market, and we did rally, and again the VIX here has melted, has gone down. In September, September was the big shock. Okay, because we had a lower than expected CPI and then a higher than expected CPI. So this was actually very, very negative for the stock market, and you can see the big crash that we had here following the CPI data, and as expected the VIX went higher. Now last month, okay, in October, we did have a higher than expected CPI data. However, the stock market did not go down as much. Okay, it's actually went bullish since that day. Okay, we seem to have a big rally since then, and then the VIX has melted since then. Okay, guys, so all this is showing here is that we may get, okay, the data shows that we may get a higher than expected CPI. The stock market may not crash. Okay, as the data seems to be more or less priced in. Now, if we do get a lower than expected CPI, then I expect this to support prices for a move up, perhaps until the end of the month or the end of the year. Okay, short term only. Overall, guys, we are still in a downtrend. Okay, and the Fed is still increasing interest rates. It doesn't matter if it's at a lower pace, it's still increasing interest rates. And until he stops and starts decreasing interest rates, that the stock market will not fully, okay, will not fully go up. Okay, so bear that in mind, because we still have a lot of downside pressure in the long term until we see the Fed stop with the interest rate hikes and perhaps starts to lower them. Okay, starts to reduce them. Okay, so this is just very interesting, just to say that I don't think that even if we get a higher than expected CPI, I still don't think we go down. Okay, but that is to see. If you get the really hot inflation data, from the expectation is, if you go back here, the expectation is that the CPI data would be 8%. If you get 9%, then we're definitely going to crash. But if we get to 8.8, 8.1, 8.2, even 8.3, that's acceptable, and I still think we get a rally following that. Okay, so just another argument for just for that short squeeze that may occur either this week or over the next couple of weeks, just because everyone's being so bearish on the stock market. Now let's go back to the charts, guys, and start with the UK 100. Now the UK 100 has done exactly as we were expecting. Now last week we did say that I was expecting price to come into this weekly IC here, okay, and have a reaction and perhaps to retest the narrowing channel that it broke. Okay, now it seems to have done exactly that. So it came to the weekly IC here and it had an initial reaction down, and then we spiked higher and retested the trend line, and it came perfectly where into this 1 hour IC here, perfectly here, and then it had a reaction down from here. Now guys, this seems to be it seems to have collected some stop losses from here, and now we should see lower prices. However, if this continues to go higher, then this was a fake out, and we may go back and retest this trend line here, guys. And if we do retest this trend line here, I have another 1 hour IC resting here at around 7490 or so. So if we do cruise and we go through this 1 hour IC here, then I expect price to top at around 7490 or so. If we don't stop there, guys, and if we cruise through this, and if we break this trend line here, then I expect us to have new higher highs even this year at some point, guys. So this chart as it stands looks very, very bearish, and as it stands, just try to look, guys, try to look for any pullbacks to add more buys to your portfolio, guys, because this just looks very bullish as it stands. Okay, unless you see price trying to failing to make a new higher high and then breaking structure on lower time frames, there is no reason to go bearish at this point, guys. Short term bearish, okay, but as it stands, this looks very, very bullish. The Dow, the DAX, the Germany 40. Now, guys, this has played out perfectly. Okay, so we had a failed break over here back in August. Now, in this time here, we finally broke the trend line, retested, and made a new high. This is just textbook. This is perfect, guys, and we gave this out on our Discord community. So again, if you're not part of it, make sure you go and you request access as soon as you can. Now, this has two potential goals here. Okay, I have two potential targets for this. First of all is this daily IC here, okay, where price is currently trying to go towards. Now, I would expect us to have a reaction from here and perhaps have a new lower high. And if we cruise through this, then I expect us to go to this daily IC here at 13,850 or so. Now, guys, there's plenty of liquidity resting above here, so I do see this as an ultimate target, okay, where price can go cruise higher here and then reverse, and then reverse its course and perhaps have a break of structure and go down. Now, I'm not saying this will happen this week, but in the next couple of weeks, this will be the ultimate target here. Just clear the liquidity from here, from up here, and then go down. So overall, guys, though there's nothing bearish about this chart, this looks very bullish. Again, use any pullbacks, any higher lows to just load up on your positions as it stands until you see a break of structure, guys. As it stands, as you can see here, we keep making higher highs, okay, higher lows and higher highs. So unless we break below this level here, there's no reason to say we are bearish, guys. So any ICs that you may see here, okay, use them as short-term sell opportunities only for now until you see a break of structure, guys. Okay, next let's talk about US 500, guys. And here this played out perfectly here. Okay, this played out perfectly where from this daily IC here. So we made a higher high, we've now made our higher low, and we are potentially looking to make our higher high. The ultimate target, guys, well, I will expect price to either come here, okay, because we never actually touch this this daily IC here at 39.25, and to be honest, there's so much liquidity resting above here that I would like us to go to around 4,000, 39.80 or so. Okay, we have a nice IC here that I would like price to get to. Okay, this 1 hour IC here at 39.80. This would be the ideal target, and if it happens at some point this month, then that would be the target for us to sell back down and perhaps target new lower lows. Okay, however, as it stands, guys, with this looks very bullish. Okay, and just use any pullbacks to add on your long positions. Now, if we do lose this level here, okay, so if we have a failed attempt and then we go lower, then we are potentially looking for a new lower low. So be very careful, okay? Add small positions for now until we see perhaps us going higher here, okay? And watch large companies, Apple, Microsoft, Google, watch how they turn green, because if they do turn green for the week, if people start buying them, then that will encourage the stock market, that will push the stock market higher. Okay, next we get the DXY, and guys, we've smashed with this analysis. We got 100%, we smashed this 100% here. We did say that we had a break of structure here, and I was expecting price to go and have the lower high. And where were we expecting to have the lower high? Right at the 4 hour IC, right there. And guess what? That's exactly what happened. Price came into the 4 hour IC and I've started to go lower. Now, what I'm targeting for this, I'm targeting a new lower low, and I'm targeting this daily IC here as a new lower low. And guys, if we do get a new lower low here on the DXY, we will get the stock market pushing up higher. Okay, that's very, very important. Okay, So monitor the DXY very closely, especially if we finally break below this 4-hour IC here, because this 4-hour IC has been some strong support here. If we manage to break below this here, okay, then we expect lower prices here and higher prices on the stock market. Now guys, if you look at the monthly here for a second, can you see how on the monthly time frame we are consolidating here, but more importantly, look how far away we are from the 20 EMA, guys. That's way too far from here. Okay, we are way too elevated from the 20 EMA, which suggests to us that we need to push down lower, okay, and into this monthly IC, which sits around 103 or so, okay, or if you take the week, we'll sit around 104, 105, we'll say, where we can potentially rest and then go and have the ultimate target of 115 here. Okay, so even though we go down on a higher time frame, on the monthly time frame, we are still bullish, guys. There's nothing bearish about this chart as it stands, so bear that in mind, okay, because the Fed is still raising interest rates. So longer term, we're still seeing lower prices in the stock market and higher prices in the DXY longer term. However, the short-term trend, the short-term pain trade is up for the stock market and lower for the DXY. Bear that in mind, guys, okay? Everyone is way too bearish on the stock market as it stands. Everyone is expecting lower prices. When everyone is expecting one thing, the opposite tends to happen. Don't forget that. Next, guys, we get gold here. And guys, with gold here, look at this, okay? So we are consolidating here on the weekly, okay, waiting for a big move, okay? We have a nice reaction out of this weekly IC here. We're just consolidating here. So I'm expecting, if the DXY indeed goes down, I'm expecting a big push in the in gold here, okay? Targeting at least 1775, okay? And perhaps the liquidity that's resting above, which is around 1800, guys. So I think we'll see higher prices here in gold very, very soon. And if we are to look at the daily picture here, guys, we are seeing some we're seeing our double bottom here, which is still intact, and we are looking for price to push above 1725 or so for us to get full bullish back on gold. Okay, so as it stands, unless we break below, guys, unless we break below 1610, then this is bullish. Okay, so it is what it is for now. Okay, especially as the DXY, as we see lower prices in the DXY. Lastly, guys, we get Bitcoin, and Bitcoin is simply in a consolidation here, guys. Okay, on a weekly, we are just seeing we are in a big consolidation channel here, waiting for a big move to happen. Now we need to see where whether we break above or below this consolidation channel here. So just have your alerts set in, guys, and we see where this wants to go. Perhaps as you know, Christmas is coming, as people have more time off, they will go back to cryptocurrencies. They will start spending money, buying Bitcoin and other cryptocurrencies. And also as the stock market, if the stock market gets a bit into the end of the year, then we may see the crypto market, especially Bitcoin, getting a bit up. If we do go higher first, okay, then I expect us to top around 30k in around this daily IC here, and then go down to our 12.5. That's the ultimate target where we want to buy. And if we do break out lower, then the 12.5 will come sooner than we think, and then we can buy from here long term. Okay, now that's it from me this week, guys. Thank you very much for watching. Please don't forget to like the video if you haven't done so already. And if you're interested in trading the stock market, or if you are new to the stock market, then head over to our website, mcitradingacademy.co.uk, where you can learn more about the mentoring courses we offer. We offer one-to-one mentorship courses. Thank you very much, guys, and I hope you have a great trading week.